This is hyperinflation. $192 billion for a single newspaper. Now this is extreme deflation, the Great Depression in the United States. Which are we headed for, and how can we protect ourselves? Let's find out. Hey everybody, welcome to Ken or Cannot. My name is Kenneth and I'm an entrepreneur who loves to talk about business and investing. So if you want more videos on how to make you a better entrepreneur and a smarter investor, make sure you click the subscribe button below and smash that notification bell. Now, today we're going to talk about something really important. And that is the US headed for inflation or deflation? Now, I'm not American, I'm from Singapore, but a good chunk of my portfolio is in the US market, so whatever happens there will affect my portfolio and of course the global trade as well. Now, there's already a lot of resources out there on what deflation and inflation is, so I'm not going to go through that. Instead, in this video, I want to dissect the different arguments from the inflation camp and the deflation camp and come to my own conclusion based on the research that I've done. But before I start, I just want to make it clear, I'm no financial advisor. I'm not some expert analyst in the finance space. I'm just a sad YouTuber with 29 subscribers on YouTube. All right, so I'm just presenting what I found through my own research. So don't make any investment or financial decisions based solely on what you hear in this video. All right, so inflation or deflation. I don't think it's binary. It's not like we can only have one or the other. I view it as two opposing forces on a battlefield fighting it out, and sometimes one side is winning a little bit more than the other, but the other times maybe another one fights back stronger. So instead of saying we only have inflation or we can only have deflation, we could have both, or it could be inflation first and then deflation, or vice versa, or having both at the same time, which is known as stagflation. So in the short term, short being the next 1 to 3 months, I fully expect the US to experience elevated levels of inflation. I mean, they literally just printed 25% of all US dollars into existence last year alone. And there's more to come. There's like trillions of dollars of stimulus plans and infrastructure bills coming down the pipeline. So it's just inconceivable that they wouldn't experience any form of inflation after all this money that's being injected into the economy. Plus, they're starting to reopen the economy. So I fully expect nominal GDP to increase in the US over the next few months, especially since we're comparing to a very low base in March last year where the first COVID lockdowns happened. So epic debt expansion along with the economy reopening has allowed the US to stave off deflation and allow inflation to win for the short term. The question here is, what next? Are we going to continue with this ridiculous debt expansion? To achieve the same level of economic impact, we're going to have to expand the debt more and more each time just to achieve the same impact. I mean, in 2008, we injected $700 billion into the economy, and at that time, that was mind-blowing. Now we're doing $7 trillion and nobody bats an eyelid. It's crazy. At current levels, just to service the interest on the US debt alone is close to $380 billion. And if you keep ballooning that debt, those costs will only increase, and it's only a matter of when, not if, when the US becomes unable to service the interest on that debt anymore. Now, in situations like this, the government has two choices: inflate the debt away or default on the debt. Now, I don't think they're going to default on the debt because the world will just be chaos. Most likely, they'll choose A, to inflate the debt away. And in history, every single scenario, every time a country has the same situation, they always choose A, inflate the debt away by printing even more money, which just makes the problem worse. This will lead to very serious or even hyperinflation where the dollar loses all of its value. And across time, across history, 100%, all of it, all fiat currencies return to their intrinsic value, which is to say zero. No currency has ever survived. No fiat currency has ever survived, okay? Take a moment and think about that. On the flip side, what happens if we don't continue to expand the debt? What happens when, come the second half of 2021, we face a monetary and fiscal cliff? There's no more stimulus being injected into the economy is reopened, and we expect the economy itself to hold up all the growth and inflation that we've experienced in the past year that was artificially inflated with all the stimulus money. What happens if the economy doesn't support that? We don't have any more debt expansion. In fact, debt will be repaid and currency destroyed Because you have less money, less free money coming in from the government. And that is disinflationary or even deflationary. That's going to put the country into a very low growth or even negative growth territory. Now, I think this is the government's worst nightmare, because if we're in a deflationary environment, there's going to be less spending, there's a more uncertain outlook, and that's going to make the economy worse. People are spending less, that means less income for other people, there's going to be higher unemployment, and that makes the economy worse, and that means there's going to be less spending, and then so on and so on and so on, and it's just a doom vortex down. At this point, how the government chooses to react is going to determine what's going to happen next. Now, honestly, I think the most likely scenario is stagflation, both inflation and deflation at the same time. Government is going to continue to send checks to everyone, institute UBI, and spend like a drunken sailor while the economy goes into a free fall. The average American's income is higher than 2020 before the lockdowns, while the economy is in free fall and there's 9 million people unemployed. How does that make any sense? So higher asset prices while everybody gets richer because of the stimulus checks and unemployment benefits, while the real economy, the goods and services provided in the country which represents the real economy, free falls down. Why should I work so hard when I can just stay at home, watch Netflix, and get paid more than before? Doesn't make any sense, right? The longer this goes on, the worse it gets. It's a perfect recipe for stagflation, or in other words, disaster. But more importantly, how can we protect our wealth no matter which way their economy goes? Personally, I think the answer is gold or silver. Now, I'm not saying to rush out and go and buy gold and silver now, alright? I could be completely wrong. Like I said, I'm just a sad YouTuber. So I think the most important thing is for you to click that subscribe button now and make me smile. Jokes aside, this is what I'm doing to protect my own wealth and possibly even profit from it. In an inflationary scenario, gold and silver always performs well. After all, it's been used as money for the last 5,000 years of history. So it's a very reliable store of wealth. Now notice I said the word store of wealth means it's just preserving your purchasing power. It doesn't mean that you're going to profit for this. It's just preserving your wealth, okay? On a historical basis, physical gold and silver is also extremely cheap compared to other assets. So the chances of it dropping or losing value is much lower compared to other assets in the market, which are all at historic highs. So the downside is much lower relative to the potential upside. It's an asymmetrical risk. If I had to place a bet on the market, I take these asymmetrical bets any time of the day. Now, in a deflationary environment, gold and silver will still drop, but it will drop much less compared to its expensive counterparts, stocks, equities, and it will also rebound much quicker than these other assets. But there are two assets that are actually better than gold and silver to protect your wealth in a deflationary environment, and that is cash and bonds. Specifically, when the prices of things crash and drop, and you have cash, that's when you can go in and buy them for cheap. And on the other hand, if the stock market or housing market crashes, interest rate tends to go down, which brings the prices of bonds up. So if you're holding bonds, you're actually going to profit from this. But bonds have been in a 40-year bull market, and I really don't want to hold any US bonds, so that's not what I'm doing. So far, we're holding some physical gold or silver to protect ourselves from an inflationary scenario, and we're holding some cash just in case there is a deflationary event. Now, if you're young or you have a higher risk tolerance, you can even go for cryptocurrencies like Bitcoin, which is supposed to mimic the function of gold, but it's fairly new. It's only been around for 12 years, so it's less tested compared to gold. That means the potential downside and upside is larger, so it's a more volatile asset. It goes up and down more, but it also presents a higher potential upside. Gold and silver mining companies also provide significant leverage to the physical metal price, so it can net you a nice profit if it goes up. But it does require a little bit more work and research into the different companies that you're investing into. Now, so to recap, physical gold and silver and cash to allow you to protect your wealth and take advantage of any opportunities that present itself. Bitcoin, gold and silver mining companies, or even smaller cryptocurrencies are there to help you profit. So how are you protecting your wealth? Let me know in the comment section below. And if you enjoyed this video, make sure you give it a thumbs up, click the like button, share it with all your friends, and more importantly, make sure you click that subscribe button. I also did an interview with investing legend Jim Rogers on this exact topic. So if you're interested to watch that video, click here and I'll catch you there.